The Nightly Business Report.
Good evening. Tonight, the World Bank predicts that due to persistent structural issues, pressures from the global economy and uncertainty surrounding trade policy, Sri Lanka's economic growth will decelerate to 3.5% this year. Despite a decline in rupee-denominated export earnings, Sri Lanka's tea exports recorded a minor increase in both volume and dollar value during the first quarter of this year. The stock market ended the day with a mixed bag of results. The S&P SL20 index witnessed a tiny increase, while the all-share price index suffered a slight decline. And as a wave of quarterly earnings announcements and indications of a de-escalation of trade hostilities between the United States and China attracted investors from the sidelines, U.S. equities recovered.
From Studio 24, here's Anuradhi Vikramasinghe.
Good evening and thank you for joining us. Sri Lanka's economic growth is projected to slow to 3.5% this year, according to the World Bank, amid ongoing structural challenges, global economic pressures and trade policy uncertainties.
Sri Lanka's economic growth is expected to slow to 3.5% in 2025, according to the World Bank. This comes as the country faces structural constraints, global economic pressures and trade policy uncertainties. The projected slowdown follows a stronger than expected 5% growth in 2024, fueled by a resurgence in industrial output and tourism-linked services. Despite surpassing the World Bank's initial forecast of 4.4%, the momentum is expected to weaken in the coming year. The 2025 growth forecast reflects challenges in maintaining the momentum, especially as global conditions remain uncertain. The World Bank's assessment highlights the need for structural reforms to address the country's long-term growth potential. With the ongoing economic pressures, Sri Lanka will need to navigate these challenges to ensure sustainable growth moving forward.
Sri Lanka's listed consumer sector is expected to see a 20% year-on-year revenue increase in the financial year of 2024 to 2025, driven by disposable income post-crisis. According to information, it was highlighted that the country's nominal GDP per capita has reached $4,500 in 2024, surpassing the pre-crisis figure of $4,300 in 2018. Public and private sector wages have improved, with further increases expected in the 2025 budget. Additionally, remittances have grown to an average of $605 million per month this year, shifting towards consumption rather than investment. It was also noted that a 5% increase in Sri Lanka's credit card base in 2024 alongside deflationary pressures lowering prices. As a result, consumer sector company revenues are anticipated to rise significantly, with strong performance expected in the fourth quarter of this financial year. Sri Lanka's tea exports saw a modest increase in both volume and dollar value during the first quarter of this year, with March figures reflecting year-on-year growth across most product categories, despite a dip in rupee-denominated export earnings.
Ceylon tea exports for March 2025 reached 23.43 million kilograms, marking a 2.18 million kilogram increase compared to the same period last year. While tea bags experienced a slight dip, other product categories saw gains, contributing to the overall rise. For the January-March period, exports totaled 63.21 million kilograms, up from 62.33 million kilograms in 2024. Growth was driven by increased shipments of tea packets, tea bags and instant tea, though bulk and green tea saw a decline. The average FOB price per kilogram in March dropped to 1,753.16 rupees, but in dollar terms, the price increased slightly to $5.92. Iraq remained the largest buyer of Ceylon tea in the first quarter, importing 9.02 million kilograms, a 7% year-on-year increase. Libya recorded a remarkable 416% surge in imports, emerging as a standout performer in the quarter.
Sri Lanka's services exports grew by 7.79% in March of this year, reaching $291.12 million, according to the Export Development Board. ICT BPM earnings increased by 2.54%, totaling $104.82 million. However, construction revenues saw a significant decline of 71.99%, dropping to $4.02 million. Financial services also experienced a sharp drop of 65 $5.96, falling to $2.10 million from $6.17 million a year ago. On a positive note, transport and logistics saw a 23.69% increase, bringing in $170.18 million US. This growth highlights the sector's resilience despite challenges faced by other services. Let's take a short commercial break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Sri Lanka's stock market closed with mixed results today. The all-share price index edged down slightly, while the S&P SL20 index saw a modest gain. The market recorded a share volume of approximately 38 million with a turnover of around 1 billion rupees. For further insights, we speak with Akna Tendakon from First Capital Holdings.
Thank you, Anuradhi. The Colombo Stock Exchange saw a marginal downturn quite similar to yesterday. Even though the SPI rose as soon as trading began, the index quickly dwindled and remained highly volatile, ultimately ending the day in the red. So the SPI closed at 15,544, having shed about 12 points. Lion Brewery Ceylon, Melster Corp, Central Finance Company, NTB and DFCC were the major negative contributors to the SPI today. I think it should also be mentioned that activity in banking sector counters was somewhat subdued today. So moving forward, in terms of turnover, it was slightly higher than what we saw yesterday, ending the day at 1.1 billion rupees. However, this is lower than the monthly average of 2.6 billion rupees. In terms of sector-wide contribution to turnover, the food, beverage and tobacco sector took the lead with a contribution of about 37%. This was followed by the diversified financial sector and the capital goods sector, which produced a joint contribution of 37% as well. Thank you.
Sri Lanka's rupee strengthened slightly against the US dollar today, while bond yields remained largely steady. A key highlight of the day was the ongoing auction of 115,000 million rupees in treasury bills, drawing attention in the financial markets. For further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Anuradhi. At today's Treasury bill auction, the weighted average yields for 3-month, 6 months Treasury bills experienced an uptick with only a 2 basis point decrease in the 12-month Treasury bill. CBSL accepted 83% of the total offered amount of 115 billion rupees, and all the 3-month, 6-month and 12-month bills were oversubscribed as well. The weighted average yield for the 3-month bill experienced a 3 basis point uptick. The 3-month bill yielded low acceptance of nearly 16.3 billion rupees compared to the offered at 30 billion rupees. The yield for the 6-month bill stood at 7.98% and yielded an acceptance of 52 billion rupees compared to the offered amount of 60 billion rupees as well. On the other hand, the weighted average yield rate of the 12-month bill stood at 8.29%, yielding an acceptance of 27 billion rupees compared to the 25 billion rupees offered. When it comes to the previous trading session, the secondary market yield curve experienced mixed trading activity while generating moderate trading volumes following the festive season. Thank you.
Gold prices fell in Asian trade today, retreating from record highs after US President Donald Trump suggested the possibility of lower trade tariffs on China and backtracked on his criticism of the Federal Reserve. Spot gold dropped 1% to $3,347.54 per ounce, while June gold futures declined 1.8% to $3,506.99 per ounce. Despite the drop, gold prices remain near Tuesday's peak of $3,500.33 per ounce. Investors shifted away from safe haven assets, driving a risk-on rally in equities after Trump's remarks. A mild rebound in the dollar also weighed on gold prices. While other metal prices saw limited gains, gold's losses were capped by ongoing uncertainty regarding Trump's policies. The market now waits for further developments on trade talks and the Federal Reserve's stance. Oil prices extended their gains in Asian trading today following fresh U.S. sanctions on Iran amid ongoing nuclear talks. Brent crude futures for June rose 1% to $68.12 per barrel, while West Texas Intermediate also advanced 1% to $63.58 per barrel. The market sentiment was further supported by U.S. President Donald Trump's decision to back down from threats to remove Federal Reserve Chair Jerome Powell. The U.S. Department of the Treasury imposed new sanctions on Sayed Asadullah Imamjogan, an Iranian businessman in the liquefied petroleum gas sector, and his corporate network. This move is a part of a broader U.S. strategy to limit Iran's energy revenue, which is believed to fund destabilizing activities in the Middle East. The sanction target efforts to evade U.S. restrictions and generate revenue for Iran through LPG exports. The Sri Lankan rupee has seen a further decline against the US dollar today, continuing its downward trend from yesterday. According to the Central Bank of Sri Lanka, both the buying and selling rates of the US dollar have risen. Despite this, the Sri Lankan rupee has shown some strength against a basket of foreign currencies. Let's take a closer look at how the Sri Lankan rupee is performing against key global currencies in today's trading landscape. A short break now. This is the Nightly Business Report. Welcome back. Lanka IOC PLC reported subdued top and bottom line performances, marking a weak start to the March earnings season. The results reflect ongoing challenges in the market environment.
Lanka IOC PLC reported subdued performance with revenues declining by 10.7% to 67.10 billion rupees compared to the same quarter in 2024. This dip was partly due to fuel price cuts at the pump, despite rising demand from mobility and industrial activities. The company's cost of sales fell by 11.3% to 61.4 billion rupees, benefiting from muted global oil prices. Gross margins improved slightly to 8.3% from 7.7% in the previous year. Lanka IOC's investments in storage infrastructure, including the development of 61 oil storage tanks in Trincomalee, are expected to optimize the supply chain and reduce import dependency. The company reported earnings of 5 rupees and 12 cents per share of the quarter, down from 6 rupees and 43 cents per share in the previous year. For the full year, earnings declined to 20 rupees and 94 cents per share, with the company also investing 15.40 billion rupees in long-term investments.
Derana has launched the 2025 edition of its Future Leaders program, a 15-month management trainee initiative aimed at developing top talent across Sri Lanka, Bangladesh, Pakistan and Nepal. The program provides hands-on experience through structured rotations in key business functions guided by senior leadership. Open to recent graduates with strong academic backgrounds and leadership potential, DFLP 2025 offers real-world exposure and strategic mentorship. Applications opened on the 21st of this month and will be accepted for 14 days onwards via the Derana's career page. Upon completion, successful trainees will be considered for key roles within the company, supporting long-term career growth. This initiative reflects Derana's commitment to nurturing young talent and driving digital transformation in South Asia. Haley Solar has partnered with BYD to launch advanced battery solutions in Sri Lanka, introducing scalable energy storage options for homes and businesses. Haley Solar has partnered with global energy leader BYD to launch a range of advanced battery solutions in Sri Lanka. The collaboration introduces innovative models such as LV 5.0, HVS Max Lite and LV 5.0 Plus. These battery packs are designed to offer scalable and efficient energy storage for both residential and commercial applications. The partnership aims to support Sri Lanka's transition towards renewable energy and energy independence. BYD, known for its global expertise in battery technology, brings cutting-edge solutions that enhance power reliability and sustainability. Haley Solar, a leading player in Sri Lanka's solar energy sector, continues to expand its portfolio with high-performance energy products. The new battery range offers flexibility, longevity and superior performance to meet diverse energy needs. This initiative reinforces both companies' commitment to driving clean energy adoption and reducing carbon footprints in the region. Meatlery, the premium meat supermarket under New Anthony's Group, has partnered with Pick-Me to offer consumers convenient home delivery of high-quality, ethically sourced meats. This collaboration allows customers in select regions to easily order Meatlery's antibiotic-free chicken products, including the popular Haritahari chicken, directly to their homes. Haritahari is Sri Lanka's first truly antibiotic-free poultry, offering a healthier alternative for consumers. The product range at Meatlery includes premium beef, pork, sausages, eggs and popular brands such as Crispies and Frenchies, all meeting the highest standards of taste and health. Through Pick-Me's user-friendly platform, customers can browse, order and track deliveries in real time, ensuring a seamless shopping experience. This partnership highlights a shared commitment to innovation, sustainability and providing consumers with fresh premium products. Lima Creations has enhanced its sustainability efforts by installing a 500 kilowatt power 400 kilowatt solar PV system at its advanced manufacturing facility in Dompe in Sri Lanka. The project, undertaken by David Pieris Renewable Energy Limited, aims to reduce greenhouse gas emissions, lower electricity bills and contribute to a cleaner environment. With a floor area of over 200,000 square feet, Lima Creations' state-of-the-art facility produces high-quality furniture and interior solutions. By generating its own electricity, the company reduces reliance on fossil fuels, mitigates energy disruptions and lowers costs. Lima Creations, founded in 2000, has become a leader in Sri Lanka's interior design industry, known for blending artistic creativity and practicality. Chief Operating Officer Priyantha Abesundara emphasized the importance of transitioning to solar energy, citing its environmental and economic benefits. The company's move to solar power underscores its commitment to sustainability and a greener future. A. Bauer & Co. Limited has appointed Gehan Senaviratne as its new board director alternate, marking a significant milestone in his career. Senaviratne, who will continue to serve as director of Bauer Life Sciences Limited, brings a wealth of experience from his leadership roles in the pharmaceutical industry. His professional journey includes successful stints at GlaxoSmithKline, Merck Sharp and Dome and Bauer Life Sciences, where he launched several innovative products. Gehan's active involvement in industry organizations such as the Sri Lanka Chamber of Pharmaceutical Industry and the Sri Lanka Chamber of Medical Devices Industry further demonstrates his leadership. With an impressive academic background and multiple certifications, including an MBA from Edith Cowan University, Gehan is well equipped to drive growth and innovation. A. Bauer & Co. Limited congratulated Senaviratne on his appointment and looks forward to his continued contributions. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian stocks surged today following an overnight rally on Wall Street after US President Donald Trump hinted at eventual reductions in trade tariffs against China. However, mainland Chinese stocks showed little reactions and traded sideways. Hong Kong's Hang Seng Index and Japan's Nikkei 225 were among the top performers, rising between 1.7% and 2%. Japan's Topix also gained about 1.8%, while South Korea's Kospi rose 1.4%. Despite mixed economic data, technology stocks across Asia led the rally, benefiting from bargain buying after recent losses. Meanwhile, Australia's ASX 200 and Singapore's Straits Times Index also saw gains driven by strong performances in mining, banking and financial sectors. U.S. stocks rebounded as a spate of quarterly earnings reports and hints at the de-escalation of U.S.-China trade tensions brought buyers in from the sidelines.
U.S. stocks rebounded on Tuesday, with all three of Wall Street's main indexes gaining more than 2.5%. Investors cheered comments from Treasury Secretary Scott Bessent, who said he expects trade tensions with China to de-escalate. But President Trump's erratic and multi-front tariff disputes have battered the benchmark S&P 500, which remains nearly 14% below its record closing high on February 19th. Investors eagerly awaited earnings from Tesla, which reported after the close. Elon Musk's EV maker topped rock-bottom profitability expectations, while global vehicle deliveries slid 13%. The company said it would revisit its annual outlook in its next earnings report due to the, quote, impacts of shifting global trade policy. Shares of Tesla, up more than 4.5% at the close, rose further in extended trading as Musk said he would scale back his role at the Department of Government Efficiency starting in May. Shares of industrial conglomerate 3M jumped 8% after the company posted better than expected first quarter profit expectations, though it flagged a likely hit to 2025 profit from tariffs. And shares of Northrop Grumman slumped more than 12.5% after it reported a sharp drop in profit.
The International Monetary Fund slashed its global growth forecast because of the impact of the U.S. President Donald Trump's tariffs, saying they will hurt the economy of the United States, China, and most other countries.
The International Monetary Fund slashed its global growth forecast Tuesday because of the impact of U.S. President Donald Trump's tariffs, saying they will hurt the economy of the United States, China, and most other countries. The IMF now sees global growth at 2.8% in 2025, down 0.5 percentage point from its January forecast before Trump's sweeping tariffs. Its U.S. outlook for this year dropped nearly a full percentage point to 1.8%, and its forecast for China fell to 4% from 4.6% earlier in the year. It sees output near these levels in 2026. The IMF called the report a reference forecast based on developments through April 4th, citing the extreme complexity and fluidity of the current moment. Gorinches told reporters it was not forecasting a recession in the U.S., but the odds of a downturn had increased from about 25% to 37%. He said the IMF was now projecting U.S. headline inflation to reach 3% in 2025, 1 percentage point higher than it forecast in January due to tariffs and underlying strength in services. He said the combination of potentially slower growth and higher prices will create challenges for the Federal Reserve. Asked about the impact of any moves by the White House to remove Fed Chair Jerome Powell, Gorinches said it was absolutely critical that central banks were able to remain independent to maintain their credibility in addressing inflation.
Well, that's all from us here on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.